Hi, my name is Rod Khleif, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of Lifetime Cash Flow Through Real Estate Investing. I'm Rod Khleif, and I'm thrilled that you're here. And I know you're going to get tremendous value from the gentleman I'm interviewing today. His name is Justin Gooden, and he founded Next Level Equity. He's in over 500 doors as a general partner, a little uncomfortable with this interview because he's on the underwriting side of things and he's pushing himself. And I'm very impressed by that because, you know, I couldn't underwrite my way out of a paper bag, but no, I'm exaggerating a little bit. But Justin, welcome to the show, brother.
Thanks for having me, Rod. It's an honor to be here.
No, I appreciate you coming on. And I know you've got a very interesting background that obviously lends itself to this business. So I'd love you to tell my audience your story, you know, why real estate, you know, and describe your ascension into being an operator and a general partner in deals.
Yeah, happy to. So I'm born and raised here in Indianapolis, Indiana. I got my first taste of real estate by investing in fix and flips and single family houses here in Indianapolis. Was doing that for a while and quickly found out that it was not passive. It was basically just another job on top of the job I already had, which was at the time going to school and work. So, you know, doing like through business school, I studied finance and supply chain management. I was doing fix and flip projects and buying rentals on the side. And on one of these houses I bought, you know, I really didn't really know exactly what I was doing. But the seller of this property, we were talking to him on the porch, and I asked him, you know, why are you selling this house? You know, very basic, very beginner friendly question. And without hesitation, he mentioned that he was liquidating all of his assets and going to invest in apartments, which at the time I thought was just a little crazy because he was also a younger guy like me. He was also in school. And so a normal kind of average looking guy going to invest in apartments, I just had absolutely no idea how he was going to do that. So that was actually the very last house I bought, because immediately after that, I stumbled upon this world of real estate syndications, raising capital from investors and working with partners to buy these larger properties you normally could not afford on your own. So that really kind of put me down that trajectory of going down the rabbit hole of real estate syndications and multifamily. So, you know, very similar after that, I graduated from college with that finance degree and really wanted to learn more about commercial real estate and apartments in general. So I started working for a commercial bridge lender in Indianapolis here as a multifamily underwriter. So that was obviously, you know, really fantastic experience for myself and what I do now. And being able to be, you know, like on the banking side, seeing how banks underwrite properties, how they evaluate sponsors. I feel like all that experience was, you know, really beneficial for me and what I do now. So since then, I've exited my W-2 to strictly focus on apartment syndications here in the Midwest, primarily here in Indianapolis. We're active in just over 500 multifamily units and working on our first ground up development deal next month.
Fantastic, brother. So you're bringing something out of the ground. So talk about the makeup of your 500 units. What is the average size, or give me some ideas on the size of the assets you're purchasing?
Yeah, the smallest property is going to be a 6-unit. It's like 15 minutes down the street from me. The largest is going to be a 236 unit. I'm just a huge proponent of doing really good deals, whether that's a 20 units, 100 unit. I'm just a big proponent of, you know, if the deal makes sense, if it's in a great area and you get a really good price. I've just always been a huge fan of buying either small, medium, or, you know, even large size properties.
Good for you. I agree completely. My team fights me on this, but I would absolutely buy smaller assets around my backyard. And so let's talk about team for a second. What is the makeup of your team? You're obviously on the underwriting side. You're typically not the mouthpiece, I would guess. Are you doing the equity raising as well, or you have other people doing that? Talk about, you know, the different people on your team. You can name them or not name them, I don't care, but really more importantly, what do they do?
Yeah, it's working with local partners, other people that I know, like, and trust here in the same market that I am, people that I know and have the same goals. But yes, I'm primarily, you know, reaching out to brokers, lenders, sellers directly, underwriting the deals, of course, that's all like what I really enjoy. I do a little bit of everything. I'm still on asset management calls. I'm still raising equity from investors. Primarily my strong point, I would say, is underwriting and finding deals.
Yeah, yeah. Okay. So you've done these deals with different team members then. You don't have like a stock team you're doing every deal with yet. And that's very common, by the way, when people get started. The team really evolves as you see who you like working with. We did a deal, I'm not going to say where because it'd be easy to figure out who's in it, but we did a deal not that long ago. And one of the guys makes me absolutely want to shoot myself in the head, and I'm never doing another deal with him, although it was a great deal. But that's a very common dynamic, guys. If you're listening, is you made and you should date before you get married anyway. You do a deal or two together. You kind of see how it goes and see if you want to go long term. It's the people that are super blessed and lucky that find their long term partner right out of the gate. But by the way, on that note, if you're thinking of getting into a partnership, I've got a great free resource. It's a list of questions you should ask before you get in a partnership. Just go to rodslinks.com, rods plural, links plural.com. It's in the free book section there. But anyway, so the 230 unit, I'm guessing, I don't have to guess, I'm certain that was a syndication. Yes, so you raised money for that deal?
That's correct.
Okay.
Joined a more experienced team, helped out raising equity into the deal. Correct.
Oh, so okay. So you aligned with a team that had already done some deals, and that's another way to get started as well, especially into the larger deals. And you can use their resume to, go out and make introductions to brokers and build relationships. Okay, fantastic. And so you raised equity for that deal, and of course you helped underwrite it, I'm sure as well, and so on and so forth. Yes.
Correct.
That epiphany was really when you talked to that single family investor that was getting into multifamily. I love to ask, talk about an epiphany or an aha moment. That was really the big one. You're like, if this kid can do it, why can't I do it? Yes?
Exactly. And you said this on your show many times, but I think a lot of people are trained to start small or think small and start small, think conservatively, and that's fine. But I think as society, we're kind of trained to be like that. So, like most people, when I was starting out and I wanted to, invest in real estate, the first thing I thought of was go buy a fix and flip. And that's exactly what I did. I had no idea you could, partner with people, raise money from investors to go out and buy properties that are more efficient and have more economies of scale. At the time, I had no idea you could do that. So that really kind of just speaks to you really have to get outside your comfort zone and do more research.
And getting in the right environment is huge as well. Now, I have some questions around that. You mentioned before we started recording, somebody that just joined my Warrior program. You have a friend. And I'll brag for a minute. I know they now own over 180,000 units. We're counting, and I've only been teaching a little over 5 years. Something I'm super proud of. And
Wow.
And most of those deals are done between warriors. They're done internally like that. And so, how did you? Well, first of all, let's go back a minute. You did underwriting for a bridge lender. Where did you get that experience? Did they teach you, or I know you got some finance background, but still to underwrite multifamily deals, especially for a large bridge lender, how did you educate yourself in that environment to start with?
Yeah, great question. So I did take some real estate related classes in business school, which kind of gave me like a really good foundation of the terms and just, high level topics about commercial real estate. But I would say the majority of that was, learned through working at the bank, working with other credit analysts that were more experienced than me, and kind of just, learning from them and how they underwrite deals. So a lot of that definitely, and also self-education. So, listening to, podcasts like this, watching videos on YouTube, taking different courses of financial modeling, real estate modeling. There's some courses out there like that as well. So a lot of it was, learn at the bank, but definitely, many hours of self-education as well. Because working on the banking side is great, but now that I'm like more on the investor perspective, it is very similar, but also extremely different when you're underwriting deals as a syndication and looking at it, what you're going to give to investors.
Yeah. It's all about the returns and keeping your investors' interests in the forefront of your mind. And so
Exactly.
So you did the underwriting at the bridge lender, but how did you push through to actually do some of your own deals? Did you align with somebody to do your first one or two deals, or you did it on your own? Talk about your first multifamily deal that was not a 6 unit, that was larger, something bigger.
Yeah, other than the 236 unit that we mentioned, I'd say like I was the lead sponsor on my first deal of a 2 property portfolio here in Indianapolis, one being a 33 unit and a 48 unit. We found those deals like right after I left the banking side. So that was like the first kind of real world experience as the lead sponsor and partnering with one other local general partner to take down this 2 property portfolio.
So you just did it. You didn't, it wasn't leaning on somebody else. You just went out there and, like Nike says, just do it. You just did it.
So I was working at the bank, and as an underwriter, you see everything. So you
Right.
see the sponsors' tax returns, balance sheets, and income statements. And while it was a great experience, I kind of realized I was on like the wrong side of the equation. I wasn't going to get that sort of net worth by working that W-2 job. So I knew I didn't want to do it forever.
Yeah. That's what an incredible insight and leverage you have by seeing what, balance sheets for these guys that, have tens of millions of dollars in net worth because they're buying real estate. And I love it. So how did you're a very analytical guy, and I know you're fairly introverted. You indicated that, and I will tell you, the introverted people I think are probably some of the most successful in this business for a lot of reasons. First of all, they have more meaningful relationships because unlike me, who's looking over people's shoulders to try to get onto the next thing because I'm so impatient, you actually hone in on someone and give them your full attention, and people really appreciate that. But there's also a couple other pieces when you're introverted. One is typically you have to check off every single box before you make a move, and then you'll never make a move. And many people get caught in analysis paralysis because of the fear of failure, whatever. How did you push through all of that to take massive action like you've obviously done?
Yeah, I just think if you are not putting yourself in uncomfortable situations, then you are not going to grow, and you're probably staying the same or getting worse. So just putting yourself outside your comfort zone, doing things you don't like to do. So like for me, I don't like speaking in front of people, but I host a multifamily meetup every month here in Indianapolis.
Wow.
So I do a presentation in front of everybody that shows up every month. That's something that I've had to, force myself to do, but I'm growing at the same time. I'm meeting investors, I'm meeting partners, I'm getting a great reputation for my own company in the city. So I really do feel like, the more you push yourself outside your comfort zone, you're going to continue growing.
No question, just like you are by being here. And
Exactly.
I know you reached out to us to get on the show, and it's kind of unusual that I'm doing this on Zoom. I just typically we have people come here in person. And it's unfortunate we weren't able to do that this time, but maybe next time when you've got 4,000 doors, huh? Right?
Of course.
Which shouldn't be too long. But anyway, so tell me what excites you about, well, actually, you know what? I want to talk about bridge debt first. We kind of alluded to it before we started recording. There are a lot of people in trouble with bridge debt right now. I just heard about a huge operator that I have so much respect for that has a place in foreclosure in Houston. What are your thoughts on what's going on right now?
I think it's unfortunate. It's unfortunate, but I think it was kind of bound to happen with just how inflated the prices have been in certain areas and certain markets, and how low cap rates properties were bought at. Very unfortunate, and I feel bad for a lot of investors losing their equity and sponsors getting their reputation hurt. So it's a lot of people hurting. Fortunately, we have fixed rate debt on every property in our portfolio. So this
Nice.
interest rate environment has made deals, future deals, more difficult to pencil out. But all of our properties, thankfully are still, stable and cash flowing and making distributions.
No, that's nice. Yeah. I would, let me ask you this question. When did you leave the bridge lender? What year?
2021.
Oh, 21. Okay. So right around COVID. Would you agree with this statement that a lot of operators these last few years have used bridge debt just to get the higher loan to value and higher return pro forma returns to entice investors? When Fannie and Freddie had reduced their loan to value, and really that's not really what bridge debt's for. It's to bridge the gap between a non-performing asset and a performing asset. Would you agree with that statement that I just made?
Would. Yeah. It was, the debt was so attractive to sponsors because it was so cheap, right? I mean,
Right.
it was so cheap. Appreciation was so crazy. You could buy, a, a property with basically, almost free money,
Right.
in the 2-3% range. So that's obviously really attractive. You can get a lot of deals to pencil out. And with the appreciation and properties basically flipping like houses, selling in 12 months, 15 months with little to no value add done. It's just that crazy appreciation. Yeah, it's definitely a crazy time.
Yeah, yeah. I think irrational exuberance is what I would call it. But the piper is being paid right now. Like I said, I know so many operators that are struggling, and I luckily in my warrior group, I only have one deal that's in trouble. I mean, there are some other deals that they're managing and will be okay. The one I don't think is going to make it, which is really upsetting to me. But it's a long story. But they waited too long to reach out to me for help. But a lot of people in trouble. So, what excites you about today's market, and maybe what scares you? If you would answer both sides of that, if anything.
Yeah, what excites me is, I still think that now is an awesome time to buy multifamily property. There's still a lot of data showing, why multifamily is and will be a strong asset in the future. Houses are continuously becoming more and more expensive, which, I personally believe is going to encourage more people to rent. It's already been proven that millennials prefer to rent. I think like anybody getting, fresh out of college or like any like the younger generation, they don't really necessarily want to go and buy a house right after college. I think people like that for the longer term are going to stick to renting and only buy a house when they're really settled down and wanting to stay somewhere long term, which could be, in the late 30s, if that. So I'm still really bullish on multifamily. Even with interest rates being high, I still think it's a fantastic time to buy multifamily. Reason being is, if you think things are expensive now, I mean, just wait until interest rates gradually come down again. As the cost of capital decreases, there's going to be, more competition in the market. Your purchase price is going to be higher because borrowers can afford to pay more. So I personally think like now is still a fantastic time to buy multifamily, even in this interest rate environment. What scares
I,
me is just the news in the media, and when investors hear things like that, how properties are going under foreclosure, or this property didn't work out well, or interest rates are high, stay away from real estate. I think like when headlines come out like that, it just puts like a bad rep on multifamily and investing. It gets investors scared, which in turn, operators like us, it makes it more difficult to attract investors into our deals and raise capital, which could, hurt our business in the end.
oh, and I will tell you, we've got a deal right now under contract in San Antonio that was under contract for 26 million. That contract fell through for some SEC reasons, and another one at 24 million, and we're getting it for 20. So,
Wow.
basically a 30% discount, screaming deal. And by the way, if you're listening and you want to invest passively, go to the cashflowclub.com, CREE cashflowclub.com. I think you can text the word club to 72345. We've created this resource with all these different educational resources. There are videos, books, articles, emails, just all sorts of great stuff to learn. And, you get there, you'll hear about that deal first once we start putting it out there, because it's just a screaming deal. But I do you look at this environment as an opportunity? I mean, I know you say it's negative because, these operators are losing deals, and I feel bad for them as well, but I lost $50 million in 2008 and 9, and I recovered. So, I mean, these guys will recover as well. But do you see opportunity in this current environment?
Yeah, I do. I think there's going to be a lot of awesome opportunity buying properties that are distressed and picking up properties at a serious discount, like the one you're buying now.
Right.
So, we're, personally, like our company is not going to be buying distressed properties or properties 50% occupied and things like that. We very much look for properties that are stable, cash flowing day one, that have some light to medium value add component. But yeah, for sure, there's going to be properties out there that are distressed, struggling, properties that have to sell because they can't refinance out of their short-term debt, so they basically have to sell at a loss. Absolutely, there's going to be some fantastic opportunity out there for people.
Yeah, this one, just so you know, it's in a B area. We own an asset a mile away, 296 unit asset a mile away. This is a 200 unit asset, larger units, fireplaces, washer dryer hookups on a lake. I mean, it's just a
Wow.
extraordinary deal. And we're assuming low interest debt long term. Still got a year and a half interest only on it. I mean,
Yeah,
it's just
awesome.
a great deal. But I don't particularly like C assets. There's about I would say a C plus demographic, B minus C plus demographic in this asset. We're going to have to raise the tenant demographic for sure. But yeah, I don't like, by the way, I don't like 50% occupied deals either. This one has some
Yeah.
vacancy, but it's not anywhere near that bad.
Yeah.
And we've got an extraordinary management company there. So all the check boxes are being marked. I was just literally there yesterday doing due diligence, yesterday and the day
Wow.
before. That's why it's fresh on my mind. But so let me ask you this. What motivates you, brother? What inspires you? What has caused you to go kick ass in this business?
Yeah, for me, it's time freedom. It's being able to have, passive income and do exactly what you want when you want, and not having to, work a W-2 job your entire life. And absolutely nothing wrong with that, depending on what you want to do and your goals. But for me, it's about time freedom. Now, being on the general partnership side, it's definitely not as passive as being a limited partner. But, I think you can agree with this as well. I love what I do. It's a really fun business to be in. It's different every day. So what motivates me is just, always striving to be better, and just working towards, having ultimate, time freedom.
I think that's what everybody wants. They want to have a life. They want to be able to travel. I'm going out of the country in the next tomorrow, really, and it's just a beautiful thing. Let's start. For me, looking at life through a lifestyle filter. So let me ask you this. What's some of the best advice you've ever received? And it can be relating to real estate, to business, to relationship, to whatever. What's some of the best advice you think you've ever received?
Yeah, the best advice I would say is, like learning to ask for help when you need it, whether
Mm.
that's a coach, a mentor, a more experienced investor than you. If you need a certain partner on a deal, I think just like reaching out for help, realizing that you don't know everything, realizing that multifamily is 100% a team sport. So reaching out for help when you need it, and don't act like you can know everything or do everything by yourself.
Great answer. Great answer. So besides that answer, I have a lot of aspiring real estate investors that listen to this show. What suggestions do you have for someone starting out in real estate investing, knowing what you know now?
Great question. So for me, it would be creating a personal brand, which I think is just absolutely critical. There's a ton of investors out there. There's a ton of people that do exactly what I'm doing, but I'm really active on social media. I'm doing things to get my name, my brand out there. So like I mentioned, I have a multifamily meetup. I have a thought leadership platform on LinkedIn that I post on every day. Just doing things to make people aware of who you are, what you're doing, and most of all, be consistent. So whether that's a podcast, a YouTube channel, a meetup, do things to, get your name and your brand out there.
Yeah, yeah. No, we live in the greatest time on earth for that. With social media, my podcast at 20 million downloads, and a Facebook group with 50,000 people in it. It's the largest in the world.
Wow.
It's like crazy, what you're capable of doing. And you don't need those kinds of numbers. Like you do a meetup. I will tell you, before social media, some of these people I've had on my show that have 5, 7, 10,000 doors, they all started with real estate investor club meetings. They're now called meetups, and they'd raise money there like you're doing and add value. There's two keys, like you just said. The first is consistency. The second is you got to add value. You add value and you're consistent. You only need 100 people, 200 people, and you're able to make things happen, find deals, raise money, all of that. And, like I say, we live in the greatest time on earth. So pick what you like. So you like LinkedIn. Do you do video there or just or articles or all the above?
Really just text posts, but
Yeah,
yeah,
yeah.
really LinkedIn and Facebook is kind of like
Uh-huh.
my strong spot.
Yeah, and there's others as well. I mean, Instagram's fantastic. So is I haven't really done well with TikTok. I may have got a pretty good following there, but I haven't really got a lot of business from there. But Instagram, certainly the podcast, certainly meetup groups. My Warriors probably I'm certain that they have about 30 meetups around the country, maybe even more than that. I've got several dozen podcasters in my Warrior group, and they all create that reach. Yeah, I love it. So, what would you say is the most challenging part of your role in what you're doing now?
Just strictly like on a real estate syndication
Yeah,
basis, just
least
what we do every
favorite,
day.
most
And
challenging. Yeah, least favorite, most challenging. I'm going to ask you what your favorite is as well, but let's start with the negative and end with the positive. So, what's your least favorite and/or most challenging piece of what you're doing now?
yeah, most challenging is probably raising capital. It's
Mm,
getting out
right,
there, getting your brand known, and just getting investors to know, like, and trust you, which, as you know, does not happen overnight,
right.
especially when you're starting out from zero doors and trying to build, reputable company and get people to know, like, and trust you. Definitely does not happen overnight. It takes a lot of consistency, like we mentioned, a lot of dedication and
Right.
doing things to prove to investors that you're the right person to invest with.
Yeah, and to push them through the fear of investing right now. I
Yes.
frankly think it's a fantastic time to invest right now, and but this it requires a lot of hand holding right now because of the media, and God, you don't even know what to trust anymore with the freaking media. Don't get me started there. But so you're in Indianapolis. Are you in any other markets, or is that just there?
Indianapolis and Louisville, Kentucky, which is just two
Oh,
hours
Louisville.
south. But
Okay, like it. I was in Lexington. I had an asset in Lexington. We sold it. Really nice asset there, but we felt it was a little shaky there. It was an absorption issue. There's some other. Well, no, it wasn't absorption. It was just the multifamily market was a little shaky. But I've heard great things about Louisville. Um,
yeah.
so what's next for you, brother?
Yeah, what's next for me is just continuing to grow my company. I'm really looking to, scale my business and continue growing here in the Midwest. Really bullish on A and B class assets. Like you mentioned earlier, the C class is just getting older and older. And while, there's still awesome opportunities out there, for me, I think it just makes more sense to focus on B and A class assets. So moving forward, really bullish on those types and getting into multifamily ground up development.
Love it. Yeah, I will tell you, I don't want C class unless it's in a B area and I can upgrade it because that
Yes.
demographic's getting killed. Inflation is insane and it's not going away. I don't care what they say. It's going to continue and the value of the dollar keeps plummeting. I fill up my truck and it's like $120. Are you freaking kidding me? And of course I'm old. I remember when gas was 24 cents a gallon. I'm not exaggerating. And I mean, it's just insane what it is now. And I went to the grocery store. I tell this story, and because I'm single now, so I'm doing my own grocery shopping. I'm like, are you freaking kidding me? That's all I get for
Yeah.
that amount of money? Are you? So I don't know how people do it, man. So yeah, C class, and definitely not D, but C even is just they're getting hammered, and it's just to me, it's dangerous. Much as I hate to say it, it just is. But well, listen, brother, I appreciate you coming on the show. You've added tremendous value. It's great to meet you. Hopefully, I appreciate you saying kind words about my podcast and before we started. It's great to meet you, and I'm sure you're going to be you're just going to continue to kill it.
Yeah. Thanks for having me, Rod. Appreciate it.
All right, buddy. Take care. So one other quick thing. We encounter so many people that are frankly frustrated. They're looking in the mirror and they're frustrated that they haven't been able to escape the rat race. They haven't been able to build cash flow to the point where they're able to have financial and time freedom with their families. And maybe they see other people buying real estate and creating, incredible cash flow. And they think, well, it's just scary. Buying apartments is intimidating. And I get it. See, that's why we created our Warrior Mentorship Program. They're our coaching students, and they've had extraordinary results. My students, I've been teaching about 5 years, and they own upwards of 140,000 units now that we know of, right? And we feel like it's just getting going. Now, we're looking to grow this group and really take it to the next level. And honestly believe that the greatest transfer of wealth could be upon us right now with this current economic environment. Everything's going on sale. So we're looking for people who want to follow a proven framework, really like a blueprint or a map, literally step by step. And then they're able to leverage our systems and our incredible network to raise money and equity, to find deals and close those deals and build partnerships, really nationwide. So if you're interested in finding out more about how you can become more in our incredible network and take advantage of the unbelievable opportunities that are upon us, you can apply to my Warrior Mentorship Program by texting the word CRUSH to 72345, or you can go to mentorwithrod.com. And what we'll do is we'll set up a call so you can check us out and we can check you out and see if it's a fit. Now again, you can go to mentorwithrod.com or text the word CRUSH to 72345 to apply, and we will speak soon.